A large tranche of Netflix Inc., NFLX, call options that are in the money, ITM, shows that an institutional investor has taken a large position using the call options with just 51 days to expiration. That indicates that the investor has a bullish outlook on the stock, and probably has faith that the company will show membership growth and good free cash flow growth in Q2. This trade can be seen in unusual stock options activity report today. The tranche that was bought was 3.7% in the money, ITM, which means that the call option strike price of $415 per share is actually below today's stock price of $431. That usually implies that the initiating investor in the call option trade is long the calls, i.e., they bought the calls. This trade is over 19x times the existing number of contracts in $415 strike price calls expiring August 18. Since this call option strike price is below the spot price, it is likely that the investor has gone the calls. This makes sense if they expect the stock to rise significantly. In effect, they gain a cheaper way of buying NFLX stock and effectively leverage their available investment funds. For example, in this case, the premium for the NFLX calls was $37 for the expiration period 51 days from now on August 18, 2023. That means that the investor expects NFLX stock will rise over $452 per share, i.e., $415 strike price plus $37 premium paid for the calls. The call options in effect are at a 4.9% premium over today's price, i.e., $452/$431-1 equals 4.87%. So the investor is effectively bullish that NFLX will rise well over 5% in the next 52 days to August 18. Why the trade in NFLX call options makes sense. We discussed why investors are now bullish on NFLX stock in our recent podcast. For example, we told that investors suspect subscriber growth will come in higher than expected, given the launch of its new shared password project. We also pointed out that the stock's forward price/earnings, P/E, multiple is significantly lower than its historical averages. For example, today NFLX trades on a 2023 multiple of 37x and a 2024 multiple of 28.6x. That is much lower than its 5-year multiple averages of 58.2x according to Morningstar and 65x according to Seeking Alpha. More importantly, investors now expect subscriber growth could spur further increases in its positive free cash flow, FCF. Last quarter its subscribers grew 4.9% YoY to 232.5 million subscribers. Moreover, Netflix now says it expects to generate $3.5 billion in free cash flow, FCF, for the year, up from $3.0 billion earlier. This implies Netflix could reach $5 billion in FCF by 2024. That could lead to a significantly higher market capitalization. For example, using a 45x multiple of FCF, NFLX stock could reach $225 billion. That is over 21% higher than today's $185 billion market capitalization for Netflix. In other words, NFLX stock could still rise further from here, especially if it stays on track to produce significant free cash flow. The results for Q2 will clearly show whether this is the case. That is why the long call investor believes this is the best way to play going long NFLX stock.